Good afternoon, IHMC friends and family. It's Shayan again, back with your weekly mortgage market commentary. One day late, but better late than never, I guess. Last week was all about the Fed, but that now feels like it was ages ago. This week was supposed to be about economic growth and core PCE inflation, but all that's been pushed aside by the headlines about Iran. So we'll get into that in a sec. But first, let's just have a quick recap about what happened with last week's Fed announcement. The Fed was unanimous in remaining on pause, and the median expectation by committee members is right in line with current market expectation. That is two cuts over the following three meetings of 2025. The dot plots showed revisions to lower growth, higher inflation, and higher unemployment since their last release, which was in March. The revisions were all small, so while lower, they're definitely not signaling panic of any sort. This is all very much in line with expectations, which is why there was really not a lot of reaction from markets in the couple of days following the announcement. And that's kind of the logical way things should unfold, right? When the Fed meets the expectations that are already priced in, no repricing should be necessary, and therefore no reaction. So that assumes that the future unfolds along like a likely path. And if there's one thing that can throw a wrench into that plan, it's escalating an already tense geopolitical situation. And that's what has stolen everyone's attention right now, right? I'm sure you know at this point, but we bombed Iran over the weekend. In retaliation, Iran launched what looks to either be a very weak or maybe just a symbolic strike attempt against U.S. airbase today. This is all still very new, and it's impossible to know how bad this will get, but this is what is driving markets right now. The potential that this evolves into a long and costly war is fueling a flight to safety trade, which is why rates are better today. Of course, if it were to happen that this becomes a long and costly war, it would likely also be accompanied by a spike in oil prices, which means higher inflation over the longer term and likely higher rates over the longer term. So who knows how this unfolds? That's all I'm going to say on it for right now, because I'm sure we will be revisiting this later in the week. So that's it for this week, folks. I will see you on Friday.